Aloi's purpose is to make sure that green inclusive finance is truly green and truly inclusive. Like, how do we really make that financing go to the last mile, being able to support the green micro entrepreneurs that are working in the informal sector, servicing clients at the last mile? We are building technology to make sure that this financing can skip a lot of the layers in the middle and then be monitored directly and then given directly and lent directly to micro entrepreneurs.
Well, Tiffany, welcome to the show. Or I should say, welcome back to the show.
It's so nice to be back. Thank you for inviting me back.
Thank you. Thank you. The pleasure is mine because, for full disclosure, Tiffany and I met 3-4 years ago in an accelerator. You guys were just getting started. It was a UN accelerator.
Yeah, that's right. Well, so early days.
Yeah, it was like very early days. And then it was very early days of my podcast too. And that's why I say welcome back, because back then we had a conversation, but now it's 3-4 years have passed. You've grown, and it's amazing to have you back and listen to the full story.
Thank you so much. Yeah, we have grown a lot. It's crazy to just think back to it.
So to get things started, this podcast is purpose-driven fintech. So first question is, how do we build more purpose-driven fintechs?
Yeah, definitely. And I think there's more and more purpose-driven fintechs, right? Which is why I love your podcast. It really is such a unique world where we're looking at how to be a bridge between different worlds. How do you, for us, right? Like, how do you bring in really informal sector micro entrepreneurs into the formal economy? And how do we use technology to build a bridge between that? So it's not focused on finance or focused on technology even, right? It's really about how do you bring very different people together to work together.
Yeah, definitely. So tell me a little bit about Aloi and what's your purpose?
Yeah. Aloi's purpose is to make sure that green inclusive finance is truly green and truly inclusive. Like, how do we really make that financing go to the last mile, being able to support the green micro entrepreneurs that are working in the informal sector, servicing clients at the last mile? We are building technology to make sure that this financing can skip a lot of the layers in the middle and then be monitored directly and then given directly and lent directly to micro entrepreneurs.
I want to build on that. You said, if I if I remember correctly, you said green inclusive finance. I'll split that question into what is green finance?
Yeah, green finance is related to sectors that are generally climate related these days, or making sure that we grow the green economy and make sure that we produce products that are reusable, right? Circular economy. While it's a little bit of a vague term, it's very much needed to make sure that our world going forward is sustainable and that sustainable businesses can be supported by financial investment.
Good. And then what's the second part of that was green inclusive finance? What's inclusive finance?
Inclusive finance is making sure those who are investable and deserving of finance can actually access financing. And right now, because a lot of the financing historically has relied on credit histories, relied on collateral that people have, that means the vast majority of the world is excluded. So that's why we need to make sure finance is also inclusive and making sure that people who don't currently are not able to access it can find new ways to access.
Yeah. And then to go deeper, like you are operating in Nepal, right?
Correct. Yes.
Yeah. Just wanted to double check. But it's like, it makes in my, I haven't been to Nepal. I would love to go to Nepal, go hiking with you. But in my mind, and I may be wrong, it comes like the word green inclusive finance and Nepal is like, it comes with a whole package.
Yeah, absolutely. Nepal and most countries actually have so much investment potential in terms of encouraging the green economy to grow, whether that is bringing in green technologies so that people have access to those green technologies and can build businesses around them, businesses that are future oriented, really, right? If you think about petroleum prices going up, in Nepal, one of the main sectors we work in is electric vehicle. With the prices of petroleum going up, everyone is thinking about how to get into the electric vehicle sector. So you're really future proofing the businesses and helping informal sector entrepreneurs being able to leapfrog and use the latest and best technology by helping them access finance.
Beautiful. So I want to step back a little bit and not talk about Aloi, but instead talk about impact as such. Let's start with basically, even though technology has been changing super, super fast, worldwide, we still know that over 3/4 of adults are unbanked or underbanked. And basically, we should be having 10 times the results that we're having now. So, what is your take on what do we need to do as fintechers today such that we can have 10 times impact in 5 years' time?
Yeah, that's a great question, really. And that's something people who work in social enterprises and especially technology social enterprises think about all the time. For us, it's really looking at where the future is going for the rest of the world, and then looking at if we continue on the same trajectory right now, the people we work with, really the informal sector micro entrepreneurs, will they be reaching that state? And the obvious answer is, so how do we get there? So I think a lot of times the innovation, it doesn't come from like creating something completely new in terms of technology. What it means is we need to build a better user interface to that technology so that people we work with, marginalized people in different sectors, can actually access services that are available around the world already, right? Financial services, honestly, if you grow up in a place where it's very prevalent to everyone, then you probably have access to that. But for us, where we work, you don't even have basic access to that. So it's building that access that is really the main problem.
Yes. Can you expand a little bit deeper? I know your business model, right? Many people come to a podcast and say, paraphrasing what you said, they say, hey, let's create better user experience. And I don't want what you just said, I don't want it to get translated into let's create better user experience. Can you then go deeper and explain what Aloi is doing when it comes to putting the experience layer on that technology?
Absolutely. I don't think it's just user experience, right? What I'm saying
No.
is we have financial access services everywhere, except in so many people that we work. And how do you get that service down to that level? And it includes making sure we rethink the models of how loans are given out. So, for example, traditionally loans are given out based on credit history. They're based on how much you have, what you have done to prove it already. But Aloe's model really is lending based on action, what you're going to do in the future, right? So our technology tracks three main things. One is how loans are being used. So for example, a loan that is lent to a dairy farmer can only be used at dairy farmer related vendors. So whether this is livestock insurance or cattle feed or veterinarian services or medicine, they can only use it in that ecosystem, but nowhere else, meaning that they are proving they are credit worthy by using the loan in the right way and allowing that to be monitored. That's one way our technology works. Another way that our technology works is through monitoring the daily income of farmers. The farmers, they, for example, get paid every day, like dairy farmers, they get paid every day. People buy their milk traders come and buy their milk and they earn an income every day. But none of this is digitized. And so nobody knows how much income they're actually getting. So our system helps digitize this payment from the buyer through the dairy cooperatives to the farmers so that they now have an individual credit history instead of just a cooperative level credit history. And then the last part is building on that, we also are able to capture some of the loan repayment through these daily transactions or weekly transactions. When the dairy trader comes and buys the milk from the farmer, their loan can be daily deducted. The repayment can be deducted from it. So this means that we are building models where your repayments are much more frequent. So banks know how their loans are performing. They don't have to wait until the end of the month. They can know every day or every week how their loans are performing. So even through these daily small micro deposits in terms of repayment, they're using actions to prove their investability.
Yeah. I love that as an example of when we say 10 times impact. I'm like, that is what 10 times impact looks like, which is amazing. So just to build on that concept of having 10 times impact, not only you, but like us as an industry, let's assume that we do have 10 times more impact in 5 years' time. How do we measure it? How do we look back and say, yeah, we did it?
Yeah, that's also measurement is another really good question. But I think right now, what's not being measured is a lot of the impacts that are not directly related to income or related to investment amounts, right? It's the human impacts, right? The psychological impact, and also the impact on people surrounding them and the community that they're in. So if you bring in, let's say, a better dairy processing point that is more climate adaptive and able to access more electricity or renewable energy, then you're going to have impact on all of the farmers in that area and whoever is selling to that cooperative. What we really would like for there to be more measurement is the softer forms of impact, I would say, that are harder to measure, but have much more of a ripple effect throughout.
Cool. And all of these, of course, needs to be done in a sustainable manner, right? And you're part of the solution. So sustainability is a buzzword out there that I'm not sure all of us understand the depth of it, and it may have multiple definitions. So what's your definition of sustainability then?
Yeah, honestly, it's something I feel has been argued for over 30, 40 years. Um, and I'm not sure we're getting really closer to an answer. But for our purposes, the sustainability is that if we can build an economy that is based on renewable energies, based on renewable resources, and have equality and inclusion in that economy, then it will be much more sustainable and it can grow to accommodate the needs in that economy.
Beautiful. And of course, whether it's sustainability, impact, purpose, we cannot talk about purpose driven fintechs without talking about people and leadership as such. So, Aloi is a female founded business to women. What advice could you give to women looking to start a business?
I think the advice has always been, and I keep telling myself also, right? You just have to start and you cannot be scared about every step. And yeah, you can't think through every single step. You just have to start. And if we really do not change anything in the world, this is actually, it's, I'm more scared of this statistic than I'm more scared of this, I'm more scared of this.
Don't worry.
There's one data point that I really love, and that is if nothing changes right now in terms of our action, gender parity in the world will take another 300 years at the best case scenario. So that data point is something that I drives me every single day because I am more scared of that data point than I am scared of failing, to be honest. I truly every day it feels like if we don't do anything to change something about women's involvement in the technology, women's involvement in building the future of the economy and technology, then it will continue as business as usual. And that will mean we need to endure another 300 years. And that's not really a world I'm willing to accept. So even if we fail, even if not every step is a full step or successful, it still means we still need to take that micro step, right? That really drives us in building this business.
I love it because exactly 300 years is not, it's not that it's just not acceptable. It's just not an option. It
Yeah.
doesn't make sense.
None of us will be around in 300 years.
What us or
Yeah,
the next generation or the next generation. So
exactly. And I want to see this when I'm 50. Like so we need to accelerate it by I don't even know how many more times. But all I know is every day we need to do our best to make sure this does actually happen.
that's a very good point. It's a everyday micro wins and actions.
Yeah.
Beautiful. So now coming back to Aloi, who is a two female founded business again. So we said at the beginning you're based in Nepal. For anyone who has not been to Nepal, can you bring it to life to us?
Yeah, Nepal is a really beautiful country and it's filled with gigantic mountains, of course, as everyone knows, and also has a lot of potential in terms of growth and in terms of bringing in a green economy, bringing in really new technologies to build out a future that is more inclusive. So that's why we started in Nepal. Of course, and also my co-founder is Nepalese, so it was the perfect starting point for us. In terms of the people we work with, over 99% of enterprises in Nepal are micro and small enterprises. That means they're mostly in the informal sector, actually. And that means almost all of them have trouble accessing the right level of financing for them, right? They might be able to access a little bit of financing, but if they really want to grow and make a big investment in their business, they don't have the ability to get the right level of financing. And generally, this is called the missing middle. And in Nepal, this is what we found about $3,000 to $10,000 of investment in their business that they would like. And if you compare that to the median income of Nepal, which is about $3 a day, this is really quite a large loan, right, comparatively. So you can understand why it is hard to get that access to that kind of level of financing.
Yeah.
And most of the people we work with, if they are able to take home about $200, $250 a month, they're already really happy from their business.
Let me paraphrase that. Basically, you're saying, hey, your customers take home, let's say, $300 a month, but they have a lending gap of 3,000.
Yeah, or more, depending on the types of business assets they want to buy, right? If you want to buy a substantial electric vehicle, then that would cost a lot more. It is a big gap in terms of compared to the income, how much they're asking for.
Yeah. So can you go a little bit deeper into that problem? You said they don't have access to this financing. Why? Yeah. Why?
Yeah. There's different levels of financing, right? Traditional commercial bank level of financing that's providing this missing middle, like $3,000 to $10,000 range. They require a lot of credit history, like formal credit history. They require a lot of collateral that most people don't own, especially women don't own. So they cannot work with these commercial banks. And then they might be able to go to microfinances, but then at the group loan model, they have to build up a credit history for a very long time. And also they still require collateral for this level of financing if they are even able to get that much from a microfinance institution. There's also savings cooperatives that are very local organizations built by a group of members. But again, here the requirements are even higher and the interest rates are even higher. So there's really no middle ground. And even if you start out at savings cooperatives and go to microfinance, to make that jump between a microfinance and a commercial bank is almost impossible.
It sounds like how you paint it. It sounds hard. It's
Yeah,
difficult.
extremely.
So usually, who could be your customers? How do you segment them?
Yeah, so we work in the electric vehicle sector and we also work in the agriculture sector. And in those, we work with specific vehicle types like e-scooters or e-rickshaws and Safa temples, which are electric minibuses that are in Taf and have been around for 30 years. So we work in these different sectors and each characteristic and also in terms of location. So we work with that. And in agriculture, we focus on some main commodities. Dairy, coffee, and soon tea are one of their focuses, making sure that we work within value chains that are more established, but also have more growth-oriented entrepreneurs, right? Entrepreneurs that really want to invest in their businesses and grow, which is very different than I would say the general impression of micro and small enterprises, which is they generally stay at a very small level and they're very happy to stay at that level. But the ones that we're working with are really the ones that are looking to invest in their own business and make a big jump.
Yeah, so they are also established businesses. It's not me baking or doing something as a solopreneur, let's say, but I've taken the step to say, hey, this is a business and I'm going to invest in it.
Yeah, so you could be a solo entrepreneur, but you really want to grow your team to 5 people or 10 people, right? Like you want to triple your output. That's the level of investment. Or, of course, it's completely fine if you want your business to stay the way it is. But there are the entrepreneurs that really want to grow, but cannot demonstrate this right now. They cannot demonstrate that they have the attitude and they have the ability and they're investable.
How how do you assess them? Because you're talking about, yeah, they have basically the energy, the passion, the demonstrate that they have the capabilities and the desire to grow. That is very different to here's a balance sheet and your risk scores. How did
Yeah.
you assess them then?
Yeah, so we assess them in two different ways. One is pre-loan. So sometimes we already start by tracking the income, especially if they're part of a cooperative, right? So we start by tracking that and seeing how consistent they are. And then we also have our own credit scoring process. Although that is not our main technology unique point, but we do have our own credit scoring process. And we've also partnered with firms that does psychometric testing, for example, psychometric credit assessment. So integrating that kind of data on one side, and then also post-loan using our core technology, which is monitoring how the loan is being used and monitoring how it's being repaid. That also helps build the credit score for future loans. It's both sides that we're able to.
Amazing. And then coming back to the origins, basically, of the company as such, we talked about that you used to do loan monitoring, and now the software is also used to do payments to platforms and micro repayments of loans. Can you tell us through this evolution, how did you go from only lending to now payments?
Yeah. We were listening to our customers really. And customers on that side, it's the banks and the lenders, right? So we kept sharing that your product is great in terms of one side of it, but there is a whole loan cycle, right? The loan goes out, you monitor it, but then how does it come back? And we took that feedback very seriously and we started figuring out what is actually possible. And honestly, the technology is very similar. It's similar and it's just the reverse action, right? But it's building out that business model and building out those ecosystems that has taken us time to figure out. And I'm very proud to say that it's properly launched and it's a feature and
Perfect. And then at some point, you also mentioned, well, when we were chatting the other day, you talked about transparency.
yeah.
That basically your payment system gives transparency on how basically that money was used to buy those specific goods. Can you talk to us more about that use case?
Yeah, for sure. In terms of price transparency in value chain, that's mostly in agriculture and specific commodity crops. So we started with coffee, actually. So we work with a specialty coffee roaster called Karma Coffee here in Nepal. They buy and sell domestically, and they also export a lot outside. And they basically export very premium grade coffee. And so they were concerned about if their farmers were actually being paid, because they used to have to buy through quite a few levels of people in the middle that are aggregating and selling. And of course, they perform a very essential function, and she wasn't looking to take them out of the equation. What she was looking at was understanding if each farmer really is being paid fairly. And the reason for that is not just because of price transparency, but because she wants the farmers to really be loyal and sell her the best coffee, right? Sell her more coffee and sell her the best coffee. And then, of course, if using that data, we can help them access loans and increase their production even better so that she can buy more and export more. So that's how we started with Karma Coffee. So we started using our same system and digitizing the payment from the buyer to the aggregation point and then on tracking to the farmer's level. So now we have the whole value chain basically tracked in terms of pricing and also being able to get individual credit scores of each farmer in that.
Are you using blockchain technology?
Yes, our technology is backed by blockchain. So we're on the Hyperledger Fabric Network blockchain. Whether the client specifically wants to use that or not is up to them. So we have that integrated. And we also have smart contracts and functions integrated. So that is definitely an option if there's more automation within the.
Awesome. I want to stop there. And then for anyone who's listening and it's, I'm not I know about blockchain, but don't know about blockchain. Can you explain to us like why the blockchain enables this transparency? Because this is a beautiful use case.
Yeah, definitely. And blockchain is really powerful because we work with quite a few different stakeholders and being able to ensure that the transparency is between all of those stakeholders and it is one unified data point that is presented to all of them is really important to us. In addition to that, I think going forward, what's really important is to build that foundation so that the data can be easily shared within different systems, right? And so that's also one of the motivations to make sure we build for that future.
But and how about the smart contracts that you said that you're using? How do
Yeah,
they put them in place?
yeah. So it's part of the blockchain technology that we're using. Smart contracts are possible, and for example, what we're exploring right now is insurance payouts. So we're working with insurance companies, and they want to automate some of those payouts if, in the case of, let's say, weather disasters, and the payout remission can be automated. That's very much possible in terms of both automating the disbursement of the payout and also then using our technology to disperse it so that I can get to people faster. And then let's say, for example, half of it is can be converted into cash and half of it they can buy with a discount at vendors that will help build their business again, right? So you can have a chain of tracking of that whole disbursement of insurance payout.
Yes, and that's what I love about your business. It's not that it is purpose driven, and because this is the thing, and it is very tech driven as well. It's not old legacy tech. It is like blockchain based, smart contract, purpose driven. It's a good. I'm like good on you guys. And since the beginning, you like when we spoke 3 4 years ago, you were already on the blockchain back then. It was not like, we made a decision to change.
No, yeah, from very start, we knew this is, again, that philosophy of seeing where the future is going. And we don't want to build something that's only useful today. We want to build things that are useful for the future so that our clients that we're looking to include into the future don't have to go another step in the future. So they will directly be connected to those technologies.
Yes. And you used the word value chain a bit ago. Can you then expand? And you also mentioned the dairy industry and that it's big in Nepal. Can you expand on the use case that you have within this value chain within the dairy industry?
Yes, absolutely. Dairy is the second largest agriculture industry in Nepal. Actually, if you come here, you'll notice that every street corner has a small shop selling dairy, fresh milk, dairy
Oh,
products, paneer, cheese,
oh,
ghee. So, like, you have, it's very integrated into the lifestyle, and people use it very much. It's a huge production need of the country, and it's one of the key industries that need investment because cows and buffalo and kind of livestock are very expensive. And it's very hard to get that level of investment. So we work with this umbrella organization of all the dairy cooperatives across the country called CDCAN, and they have over 700,000 farmers under their umbrella who are growing, producing milk and selling milk every day. We work with them and through them work with these specific cooperatives so that we can help first implement the tracking system for their income. And then when there is enough data and there is enough loan requests, we bring that whole bundle to a bank so that they can lend directly to the farmers, but through these cooperatives. making sure that the farmers are getting better interest rates and larger access to loans, but still manage through existing systems that they know. We're not trying to replace anyone, right? We're not trying to replace these systems. What we're doing is using technology to strengthen their operation so that data and knowledge can be shared across the value chain. And then we also integrate the buyers of the dairies, the milk traders that are coming to the cooperatives that are already buying from the cooperative. A lot of them want to buy more, actually, so they want to help increase production. And so we're digitizing their payments to the dairy farmers so that they can get more loans to increase that.
I love it. I'm like, I love your business. Every time that I speak with you, I'm like, oh, I love that business. It's really cool. So what's your big vision?
Our big vision is really going back to green inclusive finance, right? Understanding where that can go and how that can go. And so we think of ourselves as a digital sandbox. We have built technology that can easily collect data to test out new loan types and new sectors and new ways to lend to informal sector entrepreneurs. So we can use our technology and some risk capital to be able to set up new loan types and de-risk it. And then once these are more mature, then we know what to track, and then we can actually pass it on to commercial banks and lend so that we are not competitors actually with banks or any other financial institution. What we're saying is, let us use our technology to help de-risk sectors that you are interested in entering. And once we have enough data, then let's blend together and we can still use our technology to monitor. So that's our biggest goal.
Partnership play.
Exactly. Yeah. And that's, I think, similar with the dairy sector, right? Again, we're not trying to replace anyone. What we see is there are structures that work very specific things and they're good for that. So why don't we use technology to fill in the parts that are not good and then connect together? And that has always been values, like in terms of our values of how we work with our.
Amazing. So now I want to go to you because you're an amazing entrepreneur. Building a business is not easy. And it's sometimes a roller coaster. And sometimes it's very tiring. And there's two traits that I think every entrepreneur has. One is positivity. The other one is resilience. So how do you build resilience? Like, how have you managed that roller coaster?
Yeah, that's a really good summary, I think, of entrepreneurs. And sometimes I think we forget how crazy we are because everyone around us is crazy and we're like, we're just normal, you know? But yeah, it does take a lot of resilience and determination. And I think for me, it's been a long journey, but I really, in the last year or two, really surprisingly started understanding actually resilience comes from self-compassion. It comes from being able to take every day as it is and be happy with what every day is. But no matter how big the goal, knowing that you took a tiny step towards that is resilience, right? There is that roller coaster, but as long as you keep taking those steps and you're self-compassionate about it and you're happy with where you are, happy with where you're going, and if things go wrong, still okay with it, then that's how you build resilience.
I love it because, yeah, it's a long-term game.
Yeah, absolutely. It's very much a long-term game. And not just in terms of the company. Look, like things external to us come and go. They really can. Anything can happen. COVID can happen again and we're gone tomorrow. It really can happen. But I think the resilience and the self-compassion and the confidence in your own skills that you're building every single day, that will never leave. And even if it's not this company, it will be something else in the future. So that I think is the most important lesson anyone can learn.
Yes. And then that's when it comes to building resilience. But then if we look at your overall entrepreneurial journey, what's your biggest lesson? If there's one, I don't know, maybe there's like many.
Yeah. Oh, I think I'm most appreciative of my co-founder. It really is such a, I don't know, luck, if you can call it that. It's a fate, coincidence that we were able to meet at the right time, build a company in the right time, and also find supporters of us and work together, work on communication, work on building all of that together. I think that really is the biggest lesson. And I'm sure lots of people do it on their own, but unbelievably thankful that I have my co-founder.
Big lesson, huge lesson, because companies are built with amazing teams, but companies are broken apart and it's not a good match. Yeah, I'm happy for you both.
Thank you.
Good. Okay, so as we approach towards the end of the episode, two more questions. What's the strategic question in your mind that keeps coming up and coming up, keeps you awake?
Yeah, that's a really good question. I think strategy in terms of how to balance growth, external and internal, right? It's almost always a catch-22, right? Because you need to grow, it's a chicken and egg, right? You grow externally and then you have to grow internally in terms of the team. And then you grow internally and then you're pushing the external growth also. So it's a balance between essentially that. How much can we push and how much can our team handle and how much do we bring on? And be able to do that means we have to really ruthlessly prioritize our goal and our focus and our time. And I think that really is something strategically we're still working on, and I'm sure we'll still keep working on in 10 years. So every company is working on this.
Yeah. So if there was one thing, only one thing that you could change that could make the lives of fintechers, customers, and investors better, what could that be?
That's a really good question. I don't know. There's so many things I would love to change. But I would truly think it's more voices around the table. We talked about women involvement, but I really think it's also involvement of, let's say, grassroots entrepreneurs that we work with, right? People who are not on the internet, people who are not going to these conferences, people who are not having a voice and often have to have their voice represented by 2, 3 different layers of people, right? What we really want is direct representation and direct voice.
I'm like, beautiful way to end. Tiffany, it's been an absolute pleasure having you in the show. Hopefully, I'll see you again face to face in KL or somewhere here in Asia.
Absolutely. Asia's not that big, so definitely you're very welcome to Nepal anytime. And such an honor to be on your podcast again. And best of luck for everything.
Thank you. The honor is absolutely mine. Okie dokie, everyone. Thank you so much. See you next week. Ciao, ciao.